Hey, welcome back for another update. Let's take a look at XRP USD 4-hour on Binance. XRP being trustworthy of its reputation is actually driving a lot of people crazy of boredom because price has been oscillating into a range for quite some time. But before I give you my take on the last, 20, 30 candles, I'll just do a quick recap of where I think we are on the XRP chart. So since the pump, the upward movement that started early November, I think it was the 9th of November or the 10th, something like that. Price completed a wave 3 in parentheses, okay, Roman number. Now, after that, you expect an ABC to unfold for wave 4. And that wave 4, we got it as in contracting triangle A, B, C, D, and E. And the E parts arrived around the 9th of January. Wave 4 being complete, you make another push higher for wave 5. And that completed the entire 5-wave structure to the upside, completing wave 3 circle Roman numbers. Now, after that, things got a little bit interesting. So wave 3 Roman number in circle being completed, you expect wave 4 to be an ABC or even a triangle or something else. However, the retracements cannot go further than 50% of the entire move. So I took a fib retracement starting from the bottom of wave 2, which 2 Roman number in circle over here, which occurred on the 25th of October. And I took the extension, the top, that occurred on the 16th of January. And retracement level that we have for this wave 4, 23%, 38.2, and 50% at 128. Price broke the 23.6% at 214 and came short of the 38.2 at 161. I think this wave 4 correction is finished. We had an A as a leading diagonal. The B part of this ABC was a contracting triangle. A, B, C, D, and E. Okay. And the C leg was the most aggressive one, and we saw the whole liquidation cascade catastrophe happened. You all remember that on the 3rd of February. Assumption being made that this wave 4 is complete back then we look for a new upward structure wave 1, 2, 3, 4, 5. What we had on the 4-hour is a 5-wave to the upside. On the 1-hour, you can count it easily. Here it looks like a 1, 2, 3. But if you go down to the 1-hour, you will see that it's a 1, 2, 3, 4, and a truncated 5th. Okay, so wave 1 being completed, you expect wave 2 to unfold as an ABC. And this is what we have had for a while. Price has been range bound for a long time, with the top of the range at $2.78 and the bottom of my range. Yeah, I say my range because some people, depending on the time frame they're using, they will take different extremities for the range. That's the one I went with. Now this ABC unfolded as an A, everything classic. And then we had the B part. So the B part was in three sections. You had the A to the upside. You had an expanding triangle, A, B, C, D, E, for the B part. And the C of the ABC was a classic 5-wave structure to the upside. And notice how price just made a series of shallow new highs, but did not manage to push this even further. That was an indication that correction of ABC for wave 2 was likely not over. And this is what we had before, we had after with a 1, 2, 3, 4, and a fifth. Notice how once again the fifth goes and finds support around the 70.2%. This time it went very close to the 85%, but found support to the 78.6%. Retracement I got by taking this low over here from the liquidation all the way to the top of wave B. What follows after is interesting because it appears to be a leading diagonal. What I mean by that is from the bottom on February 28 all the way to March 2nd, we have 1, 2, and 3. What follows after that is an ABC correction. I'm going to go to the 1 hour. It's going to be clearer. An ABC correction as in A, B, and then a impulse to the downside with an extension for the fifth wave. Okay. I expect that this top over here for wave 1 correspond to the beginning of an expanding leading diagonal. Sometimes the leading diagonals can be of expanding nature, meaning that if you connect top of wave 1 with top of wave 3 and you connect separately top of bottom of wave 2 with bottom of wave 4, the lines are diverging. And if you look into the Elliott wave principle by Charles J. Collins and Frost and Prechter, oh, this one is tricky, Prechter. There is a paragraph about leading diagonal, and especially when they are expanding, the fifth wave to the upside will for sure get higher than the top of wave 3. And so if we are in an expanding leading diagonal, then we should expect price to breach above $3.02, let's call it $3.03. Now, I have to be transparent. I'm not crazy about this price action. It is a lot of overlapping. And so I decided to add another series of retracements, taking this high over here on March 2nd and this low over here on March 4th. And that's going to give me visual confidence of whether we are about to experience the fifth wave to break above the third or not. Because if price manages to reach, again, the 70.2%, that's my trading system, 70.2% at $2.78 and break above that, that's going to strongly suggest that we are indeed going to print a fifth wave higher than the top of third wave. However, if price reaches or fails to reach 70.2% and starts to print a series of lower highs and lower low on a smaller time frame, that will not give me confidence that the leading diagonal is playing out and that something else is at stake. But other than that, that's the picture I have for XRP. I think it is too early to enter a position at the moment, especially if you want to speculate on the fifth wave going much higher than the top of the third wave, simply because an invalidation point will be way too low. At least for me, is way too low, it's too late. I missed this shot. Invalidation, somewhere here, wave, invalidation. Okay, plus keep in mind that price is still in a range. Okay, you have the higher boundary, the lower boundary, and the midline. So entering long or buying spot here, hoping to catch, I don't know, 10, 15%. Very risky because the stop loss is going to be way too far ahead. And so that would mean a smaller position than usual. So I would like to see price not only break above the third one, but stay above this range. Break above the top of the third wave, but stay above this range, because for as long as we are in this range, until proven otherwise, that's the approach you have to have with ranges, price can always go up and then go back down again inside the range. And if that happens, then the likelihood that we're going to revisit the low of the range is increasing as price gets lower. Now, you could argue that it's not going to happen for a first, second, third, fourth, and fifth time, because we did that 5 times in a row, simply because the liquidity was taken away once here, twice here, a third time here, just to wipe out all those longs that entered here thinking that the correction was over. And then we wiped out the liquidity that was over here by making a new high above the range. But very quickly we get back down it. So my take is the following: no position, just observe, watch for the 70.2%. If it rejects, or if it fails to reach and starts to reject on lower time frame with lower low and lower highs, that's not a good sign. That's not a good sign. That means that the correction is not over and something else is, it could mean that the correction is not over and that something else is at play. If price breaks through the 70.2%, makes a new high and stays above it for a while, it's always hard to say how many candles you have to count, but just look at the price action, the structure that is developing, and also the volume. That would increase the odds that we are indeed going to print fifth to the upsides. No idea where the fifth wave of this expanding leading diagonal is going to end up. However, once the leading diagonals are complete, there is always a steeper pullback at play. So it would not be surprising that we get lower and revisit this range one last time for a wave 2 correction before we head higher. Okay, so that's the update on XRP. Hope you liked it. I'll speak to you soon. You take care. Bye-bye.